Welcome to F.A.C.E, Kevin.
Can you hear me now?
Got you, Kevin.
Hey, how's it going, Dale?
Oh, so refresh my memory. How long has it been? Where
Oh
was it?
boy, I don't know, maybe about a
FX
year,
Street?
year and a half. I think we chatted one time after FX Street, if I remember. It was a while
Okay.
ago, year and a half ago or so.
Well, how have you been?
I've been pretty good. I can't
All
complain
right.
considering all the shenanigans going on in the world. I've been surviving.
Yeah. Yeah.
How about you? You doing okay?
Okay. I'm doing okay. And I was just saying to Steve, I was wondering if you had any dorm rooms open at your university for me to spend a semester
Heck yeah,
or
come on
two
by.
there, huh? Anyway, have you used Zoom before, Kevin?
Not really, no.
Okay, so to share your screen,
Click on share
there's,
screen.
yeah,
Okay, that's easy enough. Let's see here. Screen two, I guess, is what it is. And share.
beautiful.
You
Okay,
can you can see my charts.
yeah, got him up there, Kevin. So I'd like to start with your journey
Mm.
and how you got involved in the business. That will, refresh my memory, and also people that are attending now and see the video. I think we learn a lot, and it's always very interesting to find out how people got involved into trading and what they were doing prior and who their influences were. So, what were you doing before you got involved in trading, Kevin?
I was cleaning toilets.
Okay. All right, so you were a motivated guy. Okay, so you were actually, and you're laughing about it, but you were in a you had a janitorial
Yeah,
service,
that's
or
right. Yeah.
okay,
Well, my
all
father
right,
came over to this country from Portugal, had nothing. So he
okay,
started working cleaning businesses and
right,
eventually started his own cleaning business. So I was working with him for many years. And then when he retired, I took over the business from him and was doing that down in the city in Toronto. I did that for about 13 years. I was managing uh, cleaning staff. We were cleaning office buildings and all sorts of stuff.
Are you
And
still in
then,
Canada?
yeah, I'm still in Canada. I just moved
Okay,
north of the city, about 2 hours north, into
okay,
cottage country land.
okay,
Try to get in with nature as opposed to being in the city. So was doing running a cleaning business for a long time, and I just got to the point where I realized I didn't want to have to answer to anybody. I didn't want clients. I didn't want staff. I didn't want the corporate world. It just was eating away at my soul. And so I figured, listen, I have to find a way to make money. But how am I going to make money where I don't need staff and clients and all that sort of stuff? And so I got into real estate investing, did that for a little bit, and then I realized, tenants are a pain in the butt. And then I did some Google searches on learning how to trade, and I joined a couple places, spent a fortune, learned a few things,
hmm,
learned what not to do, learned that a lot of the material out there is not the
yeah,
greatest of quality,
yeah. You
and
really have to be a discerning consumer
yeah, you
of
do.
mark of trading education. So that probably motivated you to, after all the um, all the hard-earned money that you spent and really got nothing out of it from some people, that you wanted to do it right
Mm.
for others. So, was there anyone that was good that really helped you make some breakthroughs and new paradigms in your trading, or
Well,
was it really just having to go through the whole thing yourself and mainly be self-taught?
Well, I think there's a little bit of good in everybody. Everybody has a little something to add. Anybody who puts their heart and soul into trading has learned something, has earned something that is valuable that I
Yeah.
have, received. But I think when it came down to it, I was not satisfied with what I was learning from other people, and
Mhm.
I learned some good stuff about the reality of the markets, being moved by the biggest institutions in the world. And that kind of opened my eyes to the fact that, the institutions are manipulating price and they're using the media to help lure retail traders into taking the opposite side of their trades. And, when I came to realize that, and that was after many years of studying price action and looking at what the institutions were doing and looking at what the media was coming out and saying, I started to realize that was the truth. And I just been working very hard on trying to determine the best way I could how the institutions were getting into positions, getting off of positions, and how they lure retail traders into taking the opposite side of the trade. So
Okay.
I, so I've been doing that for many years, and that's basically how the school got started. A lot of people were following me, and they wanted more information that I wasn't willing to divulge for $0 and 0 cents. So I said, okay, well, people want to learn what I'm doing. Let's start up a school. That way, we can put lessons together and do things organized.
Okay. So I ask people this question: how long would you say it took going through this whole process before you made breakthroughs and felt more confident about your trading that you actually started making money in the market consistently?
It was probably about after 3 years of working 12 hours a day every single day, about that.
Okay. Yeah, so your model of university is the average answer I get. Done about 1,000 of these,
Hmm.
and most people say about 4 years. And why shouldn't it
Hmm.
be that long? I
Yeah,
mean, if you're a carpenter, you start off as an apprentice, right?
yeah.
And then a journeyman, and then a master, any trade. So 3 years, you were right in that area. Um, okay, why don't we get to some of your setups? And I see that you trade fairly naked. I mean, they're nice, clean charts. Why don't we start with upper left-hand corner and tell us what A2, A3, A5, what they mean?
Oh,
And yeah,
hmm,
you want to start there?
yeah, sure. That's a very advanced thing that we're doing at the school. I teach something called the sequence, which is basically we're looking at multiple time frames. Okay, I'm looking at 6, 3, monthly, weekly, daily, 4 hour time frames. And basically the idea is the institutions move price in a very specific way. They start by accumulating a position, and because they accumulate such a strong position, it makes a rally in price or a drop if they're accumulating a short. And then what they tend to do is reverse price back to the original place where they were accumulating that position, and then they reaccumulate the rest of the position that they want, and then they take price to the next target. So by studying supply and demand on just one time frame, if you go back to the historical charts, and we've gone back to the 80s and 90s and looked at charts, and we study what the institutions were doing with price action. Where are they creating supply? Where they're creating demand? And we draw on the trend lines that the institutions use against retail traders. And so then we track how price moves. All right. So it's one thing to understand how price moves on one time frame, but now you have to break it down into all the time frames, because what happens is price moves on the lower time frames, and the movements on the lower time frames are only used to facilitate the bigger moves on the higher time frames. So this A3, A5, this is basically tracking the moves of the institutions, where they're pushing price. Are they pushing up into a supply zone? And when they push price up into that supply, when it drops, where is it going to go and where is it going to reverse from? And then it becomes like a puzzle. We're trying to figure out where the next move in price is going to be based on the previous moves. So that's what
Okay.
that A
Okay. So I
through and
see
all
you
that.
have 1780, and actually I have some moving averages there, and 1670. How did you come up with those? Were they fib numbers?
Where do you see those numbers, Dale?
I'm looking at your monthly upper left, 1781.86, 1670.43
Oh yeah,
for potential pullback targets.
oh here. Okay,
Yeah.
so everything you see in green is an area of demand that the institutions have buy orders, or they're areas of demand where the institutions are interested in buying again. And whenever you see rectangles in red, those are areas where the institutions have sell orders or areas where the institutions are interested in selling. So in gold, price came up to these highs here, and we had, you know, big expectations that price was not going to go much higher, but it instead was going
Why?
to drop. Well, because if you take a look at the COT report, you know, the data that
Okay.
comes out every single on Friday, they're basically breaking down the positions by the institutions, the largest players in the world.
Yeah, the
So,
commercials were of as short, a week or so ago as they were, I don't know, 6, 8 months ago near the top, right?
yeah, well, we don't focus on commercials. So
Oh,
that's one of the
okay.
that's one of the myths that is being taught to people that is not true. Everybody
Really? Okay.
says,
Well, I
well,
learned the myth.
well, I'll tell you why I believe it's a myth, because they say follow the commercials because they are the bigger players. Right. But if you look into who the commercials are, they're typically the traders that are looking to hedge positions based on,
Right.
you know, what they physically have. So we don't care about hedging. We care about going with those institutions who are going long because they are expecting price to go upwards. So what I've found in all my years is that
Okay.
if I only focused on the non-commercials, they gave me insight as to what price was going to do next. So here's a
Okay.
perfect example. So we're looking at a spreadsheet with all the weekly positions on gold that I've plotted. Not only
Yeah.
did I plot them, but if you take a look and you go through the history, I go back all the way. I collected every single week's data from the CFTC website. It took me forever to do it, but I did it.
Yeah.
And
Wow.
basically, when you do that and you color code everything, now I'm able to see when are they super aggressive with their long positions based on
Right.
historical positions. If we
Right.
know that the all-time largest position they ever had in gold was 408,000, if we get close to there, the cells have been coded to turn a deep red, so that tells me they're starting to get aggressive. And when they're starting to get aggressive with long positions, and then you see something like the euro, which just recently in August 11th was 266,000, that was an all-time long position. And guess what I noticed through studying the historical data is that almost every single time the institutions are reaching a historical amount of long positions, because you don't have many more uh, funds to place into a position. I mean, think about it. You know, even the largest banks in the world, they work within some kind of limitations. You know, they don't have unlimited money. You know, in a way they do, but when it comes to trading, what I've seen with my own eyes, based on studying the historical charts, is they work within certain limitations. Meaning, if you've piled in with a massive amount of long positions, you know, there's nothing
Where's
else
the
to do.
buying power going to come from after that? Is that your point?
Exactly.
Okay.
Exactly.
All
So
right.
what
Do you
tends to happen
divide
is
these non-commercials into large and small specs, or just a total of both?
just a total.
Okay.
Just a total. Yeah.
Okay.
So as we can see, back in August 11, they became extremely aggressive. In fact, they became, you know, all-time highs with long positions. And so we were saying at the school, be careful with going long because price is not going to go higher. And that was when the euro was hitting these highs up here.
120.
Yeah, up in the 120s. And
Okay.
so if you take a look and you scan through the news, you'll see all these articles coming out about the euro going higher,
Yeah. Yeah.
and then that's what happens is that, you know, retail traders get excited, they read the news says it's going to go higher, they buy. Meanwhile, they have no idea that the biggest banks in the world, the ones that are actually moving price, they've already accumulated along. They've
Right.
accumulated along for the last few months from lower prices, and now they don't have anything else to accumulate with longs. So the only thing they can do to take, you know, to actually get some money is to take profits on those positions. And when they flood the market with these positions, it's going to cause price to go down. And think about it. If they're already bought all the long positions, they have to get rid of it. Who are they going to get rid of it to? They
Yeah.
have to find people to
Retail.
buy it off of them.
Yeah. Yeah.
And
Well, I
that's what
tell you
happens.
what, it's a very interesting take on COT. I've
Mm,
never looked at it that way. And, it is also true. You're a very hardworking guy. And most people that are successful in anything, especially traders, people think that the money's just going to drop into their account.
Mm-hmm.
And I could tell by the kind of work you do and how extensive and reaching back historically to accumulate this information
Mm-hmm.
that, you have the secret to trading. And the secret is it's
Hard
hard
work.
work, it's persistence, and living through adversity.
Yes, sir.
Okay,
Yeah,
so
that's what it comes down to.
yeah, I learned from you today. That's cool.
Oh, that's great.
So I mean, I
That's
always
an honor.
used to, I viewed COT and I like it, but I thought, I did I at first, and I made many market mistakes following the commercials, and mainly I thought it was because they're always early and they have deeper pockets than me. Eventually, the market would move in that direction. But what a great point that they're just hedging. So, if they're a jeweler and they need gold inventory, they have long hedges on. And if they're a
Exactly.
miner,
Yeah,
they're locking in price and shorting it to lock in the price in case it falls. So
that's right.
really,
Yeah.
really an interesting take on COT here, Kevin.
Yeah. Thanks.
So with this information
Yeah.
and what gold has done lately, is it telling you there's a continuation move to those lower levels? And is there anything that you're seeing that might be around a turning point now?
Yeah. From what we see, gold's going to continue dropping.
Okay.
It's not going higher from these levels. All the markets are pretty much correlated in some degree.
Yeah. Have you ever
So,
seen markets so binary, Kevin? You've been doing it a while, right? So, I mean, there used to be more differentiation with asset classes, and now it's just binary. I mean, gold and equities move together. There are some correlations, but it seems like
well,
it's like a balloon.
I wouldn't know much about the equities market because I don't track it at all. But I
Yeah,
do know, in terms of gold, oil, and all the major currency pairs and the
yeah.
major cross pairs, they all pretty much are aligned with each other. I mean, meaning if euro's going to drop, gold's going to drop.
Okay.
If oil's going to go up, the CAD's going to get stronger. If the dollar drops, all the dollar pairs are going to go down. So when we're tracking the supply and demand in all the charts, we could have a handful of charts that are not giving us a very strong signal of what's going to happen. But if one of those charts is giving us a strong signal and it starts to move, it pretty much will tell us the other ones will likely do the same thing.
Do you trade oil
I do
at
trade oil.
White
Yeah.
Oak? Okay,
Mm-hmm.
so was there anything in the COT data
Mm-hmm.
that could have pointed someone's eye in the direction that, most of the, trading world was pretty bearish energy, and they've been the weakest performing part of the equity market, and it's really come to life in the last week or so. Was there
Mm.
anything in COT data that forecasted this rally in energy?
Well, it's funny. I think, the second time we chatted, I believe oil was down here somewhere. And we were forecasting a move of oil up to here. And I remember the conversation very well because you were asking me, well, what is it that you think is going to happen in the world to cause price to go up there? And my answer was, it doesn't matter what happens in the world. Whatever the institutions say is going to happen with the markets is what's going to happen with the markets. And price did eventually get up there, as you can see.
Yeah.
And then up here, based on the market dynamic, we knew that price was going to drop. So the big myth about the markets, from my perspective, is that the markets move based on what is taking place in the world. And it really isn't like that. And the reason why I know that is because when you study historical charts, Dale, I can go back to the Euro US dollar and I can go back to, 1999, and I can look at the charts, and, you know, the charts will move in a somewhat predictable manner. And these moves take place without even realizing what was happening in the world at that time. Why is that? Well, it's because the charts will move in the direction that the institutions want them to move, even regardless of if Trump's in office, if there's a war. it makes no difference. When we look at oil, for instance, let me switch over to the oil. They're always somewhat long. Okay, they're always somewhat long. But here's the deal: some pairs we can't count on the COT data, and oil was that. We couldn't really count on the COT data. But when price was up here on the monthly chart, we knew that there was going to be a shift in momentum and then a push down. You know, it goes back to what I was saying before. What the institutions do is they fill in a large amount of short positions. It causes price to drop, which is this big drop over here. And then they reverse price back up to reaccumulate those short positions. And then they eventually will push price. Now, did I think oil was going to go down to
Negative?
minus? No.
No, who did?
I
Huh?
couldn't believe that. I was shocked.
Yeah, aberrant. Yeah, I couldn't believe it either. I've
I
never
thought
seen
my
it.
data feed was going bonkers.
Yeah, yeah.
I couldn't understand that.
Okay.
But you see this area of demand that we had, and
Yeah,
we had this drawn in, Dale, a long time ago. All right, this
yeah,
area of
yeah.
demand stems from 2003. Now, who would think that something that took place in 2003 would have any effect on what's happening with price today? You would think
Me.
there is no. I wouldn't believe that. I mean, if you told me that, I'd say, what does 2003 have anything to do with 2020? Well, listen, it does have something to do with it.
The
Why?
market
I
has a
couldn't
long
tell you.
memory,
I don't
right?
know
I
if it's
mean,
that. I don't know if it's algorithms. I think, it has something to do with a little bit of the both. If,
yeah.
I
I mean,
think.
look at the 2011 high in gold at 1920. In 2020 was a battleground.
Mhm.
So,
Yeah.
it's not, it's 9 years ago that high.
Mhm.
And it was still a battleground area. Didn't you see? Did you notice that 1920? I think I saw it on your chart. Previous all-time
1920.
high in
Let me
gold.
see. Oh, here? 2011 you're talking about?
Yeah,
Mhm. Yeah, and I bet you if we took a look at the institution's positions, they were massively long
yeah,
back then.
yeah.
Let's see, 2000, what are we, 2011?
Would you be
Uh,
selling rallies in gold even after this big break?
Now, selling rallies? No, no, I would not.
Not, okay.
Because, a lot of people ask me that. They're like, well, if you're expecting price to drop, why wouldn't you just sell? Well, because it's against the odds. And if you do sell, where's your stop loss? That's the issue. It's about risk management. You can't just sell because at the end of the day, all the trends are up. Price can just stop or stall, reverse, and then head higher. And it'll
Hmm.
take you out. The higher odds trades is going long on gold and not going short.
Okay.
All right, so let me get
Trade with
back
the
to
trend.
this oil. I got to show you the deal. This is pretty exciting stuff. So on oil, this monthly chart, right? We're talking about that demand zone going back to 2000 and whatever, 2003. And
Yeah.
here it was. This is the area. So our expectations, Dale, when price was up here, once it dropped like this, we were expecting it to reverse back up and then head down, which is what it did. It stayed in the
Yeah.
range here for a bit until it broke down. Our expectations was that it was going to come here into this area and then head higher.
Hmm.
And so I had buy orders to buy there, and then all of a sudden it dropped to the minuses, and it was, a little bit of a surprise. But what I want to point out is when price comes up and closes inside those areas, it's telling us that that area is in play, meaning that how you were asking me about the A3, the A2, A4s? Okay.
Yes.
So
Yeah.
we're tracking all the moves. We're tracking it's dropping. It comes into an area of demand on what time frame? On the monthly. So what's the expected move? It's going to go up to a monthly supply zone, which is what it did right here. This is the monthly area of supply. So once we saw price close in that area of demand, we knew with high degree of certainty that it was going to head up into this area here. But what we're also seeing when we're looking at the moves that the markets are making is that oil is going to likely come up until here. And then when it hits here, we're going to see a big drop like that.
Okay.
That
There's
is
a
what this
call. All right.
is.
All right. So, Kevin, why don't you show your website for people that haven't maxed out their student loan debt to go to your university? How they could, how's your football team doing this fall?
Oh, I don't watch football.
No,
I don't
but
watch
no,
sports.
White Oak Trading University football team.
I gotcha. Sorry.
How's it doing?
Well, apparently we just got told that we can't tackle anybody anymore because that would break the social distancing rule. So it's going to kind of change the game.
So now it's
Uh,
flag football.
yeah,
Okay, so
exactly.
all right. So this is where you find Kevin, and what if you want? You got a free video, free offer. What's tuition at White Oak Trading
Well, right
Unit?
now we're okay. So this is the website www.whiteoakfx.com, and right now we got a promotion. If you want to be a full-time student and you want to learn, get access to our exclusive video library, and learn about supply and demand, how to read the COT, we have a promotion for $175. Gets you your first 3 months, which gives you a taste of what's going on. Look at the lessons, see what you like, get what you want out of it. If you want to stick around and learn more, stick around. If not, you can leave. If you do stick around, it's $125 a month after that. But if you just want access to the information, we do a report every single weekend breaking down the moves of the institutions, the COT data, all that stuff, our forecasts and our trades. You can become just a basic member, and it's $49 a month for that.
What is Sherlock?
Sherlock is a system that we created. It's the way
Okay,
of forecasting the market.
okay. Is it like an algo?
No,
Uh,
no.
okay, it's
It's
just
purely manual.
okay,
It's
proprietary by you.
it's a way of doing the analysis, gathering evidence to determine what the next moves in the markets are going to
You
be.
know, being a good trader is like being a good attorney. The more evidence you have, the more
Exactly.
compelling the case is to assume risk.
Yeah, well said.
Thank you, my trading warrior brother. I'm
Yeah,
glad we
thank you, my
got
friend.
back together, man. And
Yeah, it was an honor.
yeah, and you're a very hardworking guy, and I respect that. And you know, we've talked before, so even though we haven't done this in a while, even back then, you were my trading warrior brother, and I'm rooting for you and your student body.
Thank you. I appreciate that. It was a pleasure speaking with you, man. God bless.
All right, buddy.
All right, take
Everyone,
care of yourself.
Kevin, help me with the pronunciation of your last name.
Araujo.
Araujo, Kevin Araujo,
Araujo.
everybody. And you could find him on Twitter at White Oak Trading University or White Oak FX.
White Oak FX.
Okay. Kevin, good luck. Have a great fall trading season.
You
And
too.
we'll be in touch to, you know, not let as much time pass in between. Okay.
That would be great. Thank you, Dale.
All right.
Enjoy your
Bye.
day.
All right,
Take
everyone.
care.
Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. Good hunting. Adios.